All right, Robert, time flies when you're having fun.
Truly,
In fact, it's been a year since our special episode in 2022 where we talked about the 2023 market. So, you know what time it is for today?
repeat.
On this episode of Real Estate Chat with
Jonder Perez.
and Robert Eid, we're going to be doing the same thing again, except now it's 2023. And we're going to be looking at where 2024 is going. But first, let me look at my notes because there's a lot of things that you talked about last year, Robert. And then we're going to let you dive into what you project with your 2024 crystal ball. So, we're going to be going through, amongst other things, a price chart to see where we're going to be ending up in 2023 and what we thought it was back in 2022 using a
Right.
projected December average price chart.
Yeah, we got that.
We got that. We got a sales chart we did in our last recording. We're going to update that.
Yeah.
Uh, Interest rate movement. Robert, I mean, in 2022, when we were shooting this, did you see interest rates going to the point that it was today? Well, we're going to look at that too, right, Robert?
So
And
we'll look at that in the context of the pause that didn't refresh.
there you go. So we're going to look at that and see how that will affect 2024. Inventory, where inventory grew and where we are at now and what Robert projects will be the start for 2024 into the spring market. One thing to note, Robert, one of the interesting topics we talked about when we were amidst inventory issues in 2022, heading into 2023, was your talk on creative financing. So, real estate chat viewers, yeah, real estate chat viewers who have liked and subscribed to our episodes will know that you talked about creative financing. Go back a year ago now, and you would have seen that. And we're going to ask you, Robert, once you take hold of the mic, what the theme for 2024 will be. Where do you see prices going 2024 based on the current situation? Also, your quote for our economist, Mr. Rosenberg, that 2023 flat is the new up. So will 2024 be flat? And is that the new up? We're going to see that as well. And something we long forgotten, Robert, foreign buyer ban. Do you remember when that was a thing?
Well, we discovered it at the potluck in December, or maybe it was Thanksgiving potluck in October. And apparently it had been in the budget package in June, and it was due to come to proclamation on January 1 of 23. And sure enough, that's what happened. And then because things are in the doldrums, quickly got amended to take away any teeth that it had, and it became less than important by the time it was February the 15th. So
So it
it
pretty
was
much
it
dissolved.
was too late, too little, and out of time by the time it happened.
And everybody forgot a year later that
Yeah,
that even
yeah.
happened, more or
Well,
less.
there are still
But
people who ask for that as a certification and who are not able to buy because of certain qualifications and disqualifications. So it's
there you
not
go.
nothing, but it's not something.
Exactly. And then we're going to talk about how there was a surprise a bit in the market in 2023 that we didn't even see coming in 2022, aside from what the usual would have been, which was a big pop, which typically happens in a spring market, but a bit amplified this year. And then it kind of mellowed out. So Robert's going to be talking about that. And basically, we're going to jump into it right now. So, Robert, are you ready?
IR.
You are ready to pull out your 2024 crystal ball. Let's do it. Robert, let's start then with telling our real estate chat viewers the model for projections, seeing how we're going to be ending December so that we kind of get a pulse of where we're going to go into in 2024.
Right. So December of 2023 is very, very soft. We are guessing that there will be 8,000 new listings published when they put the numbers out in a couple of weeks, and that there will be 2,500. You can see compared to last month, there was over 10,000 new listings, 3,600 relists, and 4,200. So I say there's going to be 3,600 sales. And we add this all together. If every day I'm doing the inventory is fading, that terminates like crazy. People are pulling their properties off the market, suspended like crazy. And so now we're down, you will see it when we come to that chart in the 13s. And I can see sales, there's many holidays in between now and then. So I've tried to allow for those when I started it all up. Anyway, but the number of listings is diminishing. So that ratio we can't even really talk about until Jan 1. But we can guess that it's probably going to be showing us what we can predict from right now.
Oh,
So
in our
this one,
previous episode, yeah, our
yeah,
previous episode too, you went into that, and I think we're going to go into that later on
a
as well.
tiny, we can't avoid it yet.
Yeah. So then let's look
Okay,
at the
so
actual.
here's inventory, and as of like yesterday, I called, or I was writing it down from the Stratus machine as 13,899 and 3,600 sales, which translates to tad under 4 months of inventory. And the important thing is it's so far above 59% and 79% above the 5 and 10 year averages rather than I think it was 90% and 70% when we did it a few days ago. So um, inventory is going down, and we always say it goes down in December, January, and so it's doing that, but it started high.
Well, in our previous episodes, you also said that this December will be higher than previous December. So, Robert, going into the 2024 market, we see that interest rates have, well, I'm going to use the word stabilized, but really all it means is that the government hasn't pushed it up in the previous announcement. Some of our real estate chat viewers anticipate more hikes. We don't see a reason why there will be more hikes, but would it be fair to say we're starting with a bit higher inventory going into 2024, and will that be a concern?
Well, it will be a concern only if you're the seller of something that nobody wants. We and almost every practitioner will say anything good sells in a week. Before it sold in 2 days, now it sells in a week, and there's nothing wrong with that. So if you live in the sort of the inner sanctum boundaries that between like Bayview and Bathurst, or maybe goes over to the 401 include into the Don Valley Parkway to include Don Mills all the way up in North York, that zone, everybody wants that, and that sells lickety split, especially if it has an income suite. And then radiates out from there. The distance from the CN Tower being the ripple effect that slows down the interest and the activity and the pace of the market.
All right, so good properties will sell and somewhat
And
okay.
lickety split, no question, no problem, no price, no objection.
No objections. There you go. Let's look
Yeah.
into the sales pattern and what we're going to be seeing, at least what you projected into December, and where do you see 2024 starting out?
Well, we've got this as 3,600, and it's been vacillating between 35 and 37 for most of the month. So I'm going to say that it's going to continue on. 14th of 19.4 days, I'm going to guess that that's pretty accurate. Now we're having the 20th best December. We're better than last year by 15.5%. We're only 25, 26% off the averages. You can see the two of them are almost coincident in that stripy line, dotted line before, just above it. So for a December, it's not bad, considering that we've had 40% off, 50% off. 1 month was 14% off, but most of the time it was much below the average. So this is a good December
What would
relative
you
to the,
attribute? So,
sorry.
so Robert, what would you attribute the okay December to? Is it because everybody realizes that, look, I mean, interest rates are what they are. Either we're going to make this move or we're not, so we might as well make this move. Do you think that's the reason why? And also, what do you think would push 2024 December to a higher level?
Okay, well, there's a selection of houses that are not selling. And so that's why we're not at the average. That's why we're not over the average. Many recent years, the 5 year average is there because many years were above that and below that. The 10 year, same thing, but the 10 year and 5 year coincide. So you can see the best years are like 20% above the average. We're 30% below the average. So it's not a fabulous year. However, the quality listings, the quality properties are being bought. And so that's why we have 3,600 units selling, not 9,000, not 8,000, not 5,000 units selling. And the supply people are paying along. We looked at the categories of people, and so some people are holding off on purpose. Other people are desperate to sell, and they're up for sale, and they just put out a new listing, terminate, and in between Christmas and New Year's, they want to sell bad. And other people just lost their tenant and think this is a great time to get rid of this unit that's been a bugaboo for 15 years. So there's nothing. It's not fabulous, but it's a good bad market.
All right. I mean, let's look at the details here because this is one of the popular charts that we've reviewed on this channel, which is the plus minus. Where would we end up if prices started to sink at a certain point? And so take us through this, Robert.
Okay, well,
We
this starts
are
out by looking at the past 22 years, what happens in between November and December. And in 21 of those 22 years, it was a down month, and the average in all of those years was minus 281. So I used minus 281 and applied that to the previous month's price of 1082, and I got 1051 and change as the December monthly price. And so we can see there that it's 0.05, almost the same as a year ago, and 78.8, 79, 80% of the peak. So nobody's surprised by that. Flat is the new up from a year ago. And
And,
so
and we
I
talked
used
about,
that number for our look at price and prices as we move on to other charts.
all right, so let's move on to the other charts. And so we are here in
Right. So
terms
this
of,
is the January to December chart. I've got another one that shows us the school year, showing a different forward look. But here we're still able to say it's the second highest December on record by 0.05 that we just mentioned what we were year over year. The price at 1051.77 is 93% of the maximum that we ever saw in December, which you can see above it there. And 78 and change percent of the February peak, and still 101% of where we were at the beginning of the year, well, January, the end of January price of this year. And we're 97.19% of the previous month. We're down the 2.81%, as we were saying. And that's where we got the price change. So it's typical little downturn for the end of the year. And it's not as high as the highest, but it's above the second highest. And now we're the second highest.
okay, so here's where we bring out the golden nuggets that our loyal real estate chat viewers and first timers who are just joining this channel are watching for. Robert, going into 2024, I know it's one thing to have a crystal ball, it's another thing to use data to do projections and forecasts. What do you see happening to prices? Because that's
Okay,
what
next chart, my
we're not getting.
buddy. Next chart. Next chart doesn't make it
There you
stop
go.
at December. Next chart carries on as if the market and the everything about the real estate business started on September the 1 and goes through, which is actually what it does. So here we are at the sort of, I don't know what, azure blue, um, December 23, and we're looking into the future across that line, and we can see that we've been tracing the previous year pretty close, just like it showed on the other one. So we have wide open this big gap, looking between that blue line, 2 years of January 23, and the big space up there for January 22, leading to the all-time record, never achieved price and volume ever before month of February 22. So the sky's the limit on potential. So it's going to fit in between quiet and fabulous, which of course we knew that. The world is not coming to an end. Canadian real estate, particularly Toronto real estate, maybe Sudbury or maybe some like far away and you paid too much, might be having a bad time. But Toronto is 416. I'm going to call it 416 and 905 is just like Remax said 0.5 and Royal LePage said 5%. And when it first came out 5%, people said, well, that's pie in the sky. But if we know that what we need right now is 2% off the mortgage rates, and we know almost for sure that we're going to get 1% of that in the course of 2024, we're halfway there. So maybe 3% is doable for sure, like 85% certain, and 5% will just depend on who catches fire. If somebody can figure out how to provide their buyer with financing that takes the buyer down to the acceptable level of financing for 18 months, 24 months, prepay the interest, buy down the rate, offer them a VTB, something or other wraparound mortgage that we can spend hours talking about, but nobody knows what we're talking about because it's not become very commonplace for 15, 25 years. So, yeah, that's where we are. We're in the middle. Let's call it 5%. Why not?
1-2 possible in the spring?
Are you saying the price?
Yeah, 1-2.
I can't do the math fast enough to say what it is, but no, I'm talking about the whole year. Add 5% for the whole year.
5% for the whole year.
Yeah.
All right. Well, stay tuned for that. We're looking at a sandwich between 2021-22, 2022-2023. Somewhere in there, it's going to
Yeah.
fall
So
in.
as David Rosenberg, I hope he said it because he said it so well when he did say it is flat is the new up.
There
So
you
gradually up is the new where we're going to be. Okay. So
go.
everybody's been talking about inflation. So here's our graph on the cumulative effect, which we just heard that inflation stayed static. Now, this is going for 2.91067 years, which means to November. And it starts at zero, I'm sorry, at 100 in 2020 and goes up to 115.32 in most of the way through 2023. So if you divide that out, we've got 5.263 annual rate simple cumulative rate of interest every year. So if we put the next chart up, we superimpose our real estate prices on top of that. Same thing, starting in 2020, the December price was 932 and change. And we went super zooming up for December, still wasn't the peak. December of 2021 up to 124, so 24% up. Then the next year, things came crashing down, but still way above where we were, to 101.85, 101, 1051, 1051, and where we are now at 105,177, which is, almost the same. So we haven't quite kept pace with inflation for those 1, 2, and almost 3 years. But inflation is certainly a factor. Now, inflation means that the buying power of the dollar is diminished by the amount that they're saying inflation has eroded. So, we went up too high because, again, this peak here doesn't show our 133 pi peak. This is only 1,157. So it just shows you relative to the same starting point and the same finishing point, how we did against inflation.
Oh, we'll see. I mean, because inflation apparently has cooled off, or the effect of it has cooled off a bit.
Okay, well, this is the tricky part. If they did not have gasoline prices going down 7%, if they did not have energy prices going down percent, if they, it would not be any three.
Which we talked about as well. So go search our previous episodes. We talked about that and the cumulative effect it has on inflation. Let's talk about months of inventory real quick.
Okay, months of inventory. Months of inventory, let's say that it comes out to 4. It's 386 months, counting the amount of inventory that we used a few days ago and the number of sales that we used a few days ago. So it may change slightly, but it's going to be still within spitting distance of 4 months of inventory, which is, if you look at that dotted line going across, the last time we saw 4 months of inventory was quite some time ago. So I suppose what we want to see is inventory going down and sales going up, and both of those will contribute to getting us back down to around 3. But right now, we'll get to this buyer's market, seller's market thing in a slide or two, but there are plenty of houses that nobody wants up for sale, and a shortage of properties at interest rates that people want to pay right now. So how can they both be hot and cold at the same time?
Well, that's what's really pushing that up. Let's look at, we talked about this as a theme in many of our previous episodes, which is the net new listings, which, Robert, as you discovered, was the inflated number of new listings, therefore affecting sales to new listings ratio. Where do we sit now?
Well, I had to pick a number, and at first I did it more aggressively, and now I've moderated because I want to be close to what the board publishes. And whatever reason the board chooses and whatever algorithm that they're chewing with, then they're probably going to say there was 8,000 new listings and that there were 2,500 duplicates, which gives us, by subtraction, 5,500 net new listings. Now, that net new listings is the red line, and the red line is a little bit above the regular number of new listings. But the blue line is what's announced as the number of new listings. And with much to do, they're saying, oh, pressure's come off of real estate because there's many new listings flooding the market. But what it is, it's the same one coming through 5 times. And it's not new, it's just repetition and somebody's vanity. They've run out of ideas of how to promote the property, so they just run it through the system, hoping that somebody will see it and find it as attractive and take it away. However, this is now representing one more point on this. One more point. Well, it's written up on there that this represents I'm going to call it a double counting of 31.25% of the inventory. Now that's a significant number. If we over presented prices by 31% or over presented sales by 31%, there'd be an uproar. And if you subtract down the relist, it's really only 5,500 that are really new And so the terminates cannot be ignored. They're representing 45% of that same number. So we have our two lines here. The red line is the conventional line that says 45% sales to listing ratio, meaning that of all the listings that come out, 45% of them are selling. Now, we used to say 40, some people say 45, so I picked 42.5 as where the delineation between balanced and buyers is. So we're right on the edge of balance. We're not in buyers where it's like 8% or anything. Now, if you do it the other way and you subtract out the duplicates, so you're only saying what's the net number compared to the sales, it's 65% of the net number of listings are being sold. Now, that's in the seller's territory. So why is there nothing good to look at? Because there's lots of garbage. So this is a buyer's market and a seller's market at the same time. And this is confusing to a lot of people because they're trying to make comments based on the red line. And the reality, if you actually were out there, is based on the black line.
Well, that's the confusing part with a lot of, real estate chat viewers and everybody in the general public is, based on the perception of what is put out there by the media, by economists using these stats, and we've covered this again, we've covered this in real estate chat
Hmm.
episode, is what is the sentiment of the market and does that affect the market? So last but not least, and to round up this episode going into 2024, we brought this chart up as a common one in terms of our previous episodes to determine, where we're at now, where we might end up. So, Robert, let's wrap up this episode with where do you think, based on this modeling, where we are going to be by the end of
Okay.
2024?
So if I'm right in saying that the change from November to December is down 2.81%, and we're going to be at 1,057,770, that's establishing a new recent low that we were lower than that before. If you follow the red line with white diamonds, you'll see it was a little bit lower than that. But normally as we move out, the prices go up. And normally as we go out, we have inflation moving them up. So here, inflation adjusted, we're probably even flat with whatever that was, 1 year instead of 2 years out from the peak. So I think it says we're on track to follow that line that peaked in the fall, the fourth quarter of 1989, and we're now approaching 2 years, so we're like 1991, except it's not quite as bad as 1991 because it's not 18%. It's not, oh, we're trying to kill everything, employment, everything terrible. Plus, at that time, which everybody forgets, they had an election in 1988 over free trade or getting rid of it, and they replaced free trade introduced free trade, where before that time, Canada had a branch plant economy where Sarnia, Brampton, all these little towns had a General Steelworks, had a Ford plant, had a something or other plant that provided really good union wage jobs for 2,000 people, enough to support the basis of the whole town. And those people had worked there for a long time. And the deal was in Canada that Ontario got the plants because it was right next to the U.S. border, so you just shoot across by train or by the goods back and forth, and the free track, the auto pact, assemble the washing machine, assemble what it is in Canada or in Quebec too, and Canada, or I'm sorry, Ottawa made the deal that Ontario would have to pay more in equalization to the other provinces to make up for the fact that they got all the jobs under this arrangement for not free trade. When we got free trade, it killed Ontario. Now, if Ontario was the engine, then guess what? It was worse than ever before. And I just read a report from the governor of the Bank of Canada in 2000. He didn't mention this. Like, he was right there, but he didn't mention this because was it a blunder? We don't know whether it's a blunder. I'm going to say yes, but maybe I'm wrong. But it was an unpleasant fact that to admit that you made that colossal a change to the economy, no one wanted to take credit for that big of a boo-boo. But that's a fact. It's never happened before and will never happen again because you can't put it all back together to make it unfall apart.
Basically, different occurrences, different times, and different places happening. But let's wrap up with this question then, Robert, for all of our real
Sure.
estate chat viewers and everybody else who's looking to now enter the market, because we talked about this continuously, but
Yep.
should somebody looking to enter the market in 2024 or make a move? So you've always talked about your various different classes.
Yep.
Should somebody be confident to transact in real estate in 2024?
I'm going to say yes, and here's why. The person who's a buy-sell customer, they're either going to buy a slightly higher priced house than what they have now or slightly lower price based on whether their family is growing or getting smaller or whatever, moving closer or farther away from the scene of town. Then they're looking right now, but they're trying to be very, very shrewd in, I know I'm going to get 1.6 for mine. I'm not going to pay more than 900 for my what I want to buy. Very shrewd, and because they don't have to go anywhere. They have no urgency. So those people are going to finally do something because they're sick of looking, and they'll find something that's nice. It's a much better price than they saw back in June when they first started looking. And so they'll say, you know what, I think we can swing this thing that we want to do because the demand for ours at Young and Eglinton is super big, and what we're going to get over here at Bradford or something or other is really a good deal too. Because the sellers who outsmarted themselves are going to give up. They're going to say, look, this is never going to end. I can't carry this anymore. At these interest rates, I was able to barely cover it when I was paying variable rate at 0.85%, but at 3%, at 7%, I can't do it. I can't qualify for the next renewal. So they're in a dump. And the investors, as we said before, who are underwater, they're going to dump. So there'll be lots of who cares properties. There will be a few more power sales where it'll go back to the lender. The lender will say, well, okay, you're out, and we'll try and put it as, make it vacant, and away you go. So the buyer who doesn't need to sell a house, all they've got to do is say, okay, interest rates have peaked. So what I want to do, just like we were saying before, if I'm going to buy for March and I figure interest rates are going to be down by 2 points, 2 Marches from then, or 1.5 Marches from then, the fall of 25, then I just need to make a deal with the seller, perhaps, or put up with extra interest rates, get a short-term rate. Like right now, if you look at the whole array of interest rates, the cheapest one is 5-year lock. Now, that's insidious because everybody's going to look at that and say, well, I think I'll take the 5-year lock. And then 2 years from now, they're going to be saying, why did I take the 5-year lock? Why didn't I take the 2-year? If I know in 2 years it's going to be down, then why do I want to be locked in for 3 more years after that? So it's like turn your brain upside down. Don't think simple, think more complicated. Think about 5 years from now. And so what's going to happen on that renewal? What's going to happen on that renewal? There was no problem renewing with your existing lender every 6 months, every 1 year. No problem. So should you buy? Yes, you should buy the best possible property in the best possible neighborhood in the best possible condition that you can find.
Oh, there
So
you
you're
go.
looking.
There you go. A
Gotta be
glimpse,
looking.
glimpse into 2024. And Robert and I will be here along with our Real Estate Chat viewers to help you navigate and guide through. We want to thank you for those of you who've been watching us very early on. I mean, we have grown our community quite a bit because of your help, and we want you to continue to share these episodes with everybody who you find would benefit from it. Most importantly, as Robert and I always say, do what's right for you. Learn, educate, don't take things lightly. You've got to do your own investigation, and definitely we pick apart a lot of these things in our channel, and we look forward to doing that for you for another year. Thanks so much for watching this episode of Real Estate Chat, and we're going to see you in 2024. Take
See
care
you
and
next year.
bye for now.